All right, if you have enjoyed watching my Mark Cuban video where I do a breakdown of his investments, then you are in it for a treat today. And if you haven't watched that video, finish this one and then go watch that one. It's great. All right, today we're gonna dive into Daymond John. Stick around to the end and I'll tell you why Daymond John is simultaneously the best investor of the sharks, as well as, frankly, the worst. Daymond John is known as the founder of FUBU, a really successful clothing line. And I think that's important because it frames a lot of how he invests, or at least it frames a lot of how he should invest. And so we're gonna dive into his track record and dissect it a little bit and see if we can give Daymond some tips on how to be a better investor. Not that, he really needs them because he's doing okay. All right, so let's dive into some stats. Now, whenever I watch Shark Tank, it feels like Daymond is the quietest of the group. He kind of sits back, he waits, he watches, occasionally he'll throw in some money. And so I was shocked to find that he is actually the most prolific investor of the sharks, with a total of 61 deals that he's done so far. Of those 61 deals, 29, or almost half of them, have gone out of business, with 31 still remaining in operation. And from what I could tell, I couldn't see that he's generated any exits. Now, an exit is simply a time when an investor is able to generate a return on their investment. And that's what I mean. And so, actually generate cash in their pocket, not just some paper gains, but actually get paid out. Now, I would be surprised if he hasn't generated any returns. And I'm going to talk about that at the end and talk about the different ways in which I think he's probably generated some pretty healthy cash for his wallet. But none of the deals that I could find and information I could find in them indicated any sort of acquisition so far. So let's talk about his best investments. So Daymond has done incredibly well on a number of his investments. 3 of his top 5 performing investments are all, drum roll, guess what it is, clothing related, which makes sense because, he's built an incredible clothing brand, knows all the ins and outs of that, and how to help these companies succeed. So it's no surprise that, he's been successful in backing clothing brands. So which of those companies? Well, he was an investor in Bombas. We're going to dive deep into Bombas because I'm actually also an investor through my firm in Bombas. He's an investor in Mission Belt, where he's turned a $50,000 investment into $2 to $3 million of paper gains. He's also an investor in a company called Freshly Picked, where he made a $150,000 investment and turned that into what I estimate to be around $10 million of value. Both of those companies are actually kind of fun for me because they're both based in Utah, where I'm located, and so I'm very familiar with both brands. One of them, Freshly Picked, is led by Susan Peterson, a phenomenal investor, and the other one, Mission Belts, was led by Nathan Holsapple, who incidentally is no longer with the business and is instead fighting a number of lawsuits that you can go Google search if you want, but pretty crazy stories. Nonetheless, the business Mission Belt continues to do really well without his leadership, which is good for Daymond. His other 2 investments that I round out his top 5 are Scully, where I'm thinking he's generated about 100x return on that investment. That is a really cool company. If you're a student looking for scholarships, you should definitely check out Schooly.com, where they can connect you to hundreds or thousands, Then you should definitely check out Schooly.com, where they can connect you to something like 20,000 scholarships that are out there. So pretty cool investment, had a lot of impact. That company, according to what I was able to find, has 4 million users, or in other words, has helped 4 million people find scholarships, hopefully, or at least a big percentage of them find scholarships to help them cover the cost of education. And then his last one is another personal favorite of mine, is the company Spikeball. Any Spikeball fans out there? I'm a big fan. And, I didn't realize when I was looking at his portfolio that they had actually raised money on Shark Tank and that he was an investor. Now, one of the interesting things about these 5 investments is, with the exception of one of them, Daymond is the sole investor in these investments. And if I'm one of the sharks, I should be paying more attention to Daymond's investments because, they're missing out on some of the really good ones by not teaming up with him to get in. How good are these investments? Well, I think Spikeball, I'm estimating, has generated about a 25x return on investment. Next is Mission Belt with about 50x his investment. Freshly Picked, like 70x his investment. Schoolie, like 100x. And Bombas, we're going to get into and dive deep in just a minute. In total, of his 63 investments, 9 of them have seen increases in valuation based on the information I was able to find, which, is better than some of the other sharks. But when you consider how many investments he's made, it's not quite as high as I was hoping. And Daymond is another good example of this idea of power law, where a few investments generate most of the returns, and the rest of the investments, the majority of the investments, either just barely return what you invested, or you actually lose money on them. And that is definitely the case with Daymond. Just some other interesting stats about him. So Daymond invests about 45% of the time he's invested alongside other sharks, so 27 of his 36 deals. His average investment's about $95,000, $96,000, but his mean is about 95, so pretty close. Like, you can probably expect to get 95 to 100 grand out of Daymond. His biggest investment's $500,000. His lowest investment's $20,000, which in comparison to some of the other sharks, it's not the tightest range. Barbara actually has a tighter range. She hasn't written a check larger than $350K. But in comparison to, Robert and Mark, they have written much, much, much bigger checks as well. Which, I guess is good for Daymond because, a lot of his companies have gone under. And so, at most he's only risked $500,000 in any given deal, which honestly is part of how you want to invest as an angel investor or as a seed stage investor. You want to kind of sprinkle a little bit of cash on lots of opportunities that have a lot of potential to grow and get really big. Because it's really hard to know which one of those is really going to, get to escape velocity and get to the moon. So let's dive into Bombas. Now, I have to be careful here because I am an investor in Bombas. I think it's a great company. As with all my videos, I'm not providing investment advice. Not that you can invest in them today anyways, because they're privately held. But great company. They make socks. And if you haven't tried out their socks, you should. They're super comfy. So even though I know all of the numbers on Bombas, I'm just going to go off of the numbers that I could publicly find and kind of base my valuation on the company based on those numbers. So scouring the internet, I was able to find that Bombas is reportedly to have generated $240 million in revenue in 2021. Now, assuming that they're growing, maybe they get to, $300 million this year. It seems like it would be a reasonable estimate on growth. But maybe they didn't grow that much. Maybe it's 250. I don't know. So what I decided is, because it's ambiguous, we would just try to be really conservative. And we'd say $240 million in revenue. I then used a 3x revenue multiple. And the reason I use that is because if you look at consumer products multiples on revenue over time, over the long run, they usually settle out at about 3x for a really well-run company that's growing and doing well. And so I felt like that was a reasonable estimation. Based on that, you're looking at a valuation of around $700 million for that company. Keep in mind, when Daymond invested, he invested $200,000, which is, like I just mentioned, which is roughly 2x what he normally does. So he was a believer. He bought about 17% of the company. And so the company was valued at, call it, like $1 million, give or take. So to go from $1 million to $700 million is pretty phenomenal. Now, there is some dilution along the way where other investors have come in and put money into the company. And so, that $700 million valuation's not, it's not like his position is now worth 17% of that. There's definitely some dilution along the way. The flip side is, I think that $700 million is probably a relatively conservative estimate for Bombas. And so I just figured, let's just keep the 700 million. Let's give Daymond the benefit of the doubt. If that's the case, then he's generated a whopping 700 times his investment. And that $200 million is worth upwards of $100 million today. That is crazy, crazy great returns on behalf of Daymond. And because of that investment, just that one investment and nothing else, puts him as the best investor of all the Shark Tank investors. In fact, it's not even close. He's invested $5.9 million, and just on that one investment alone has turned 5.9 into 100 million. I mean, his returns are phenomenal. If you were a fund, he is currently on paper generating a 27.6x return. That means if you invested $1 into Daymond Capital, on paper, that dollar would be worth $26.7. That's pretty great when you consider all of the investments that he's made. $5.9 million of invested capital and turning that into $161 million is pretty dang good. I also think it's interesting. So Daymond's net worth, scouring the internet, is estimated to be about $350 million. And so when you divide 5.9 by 350 million, you get roughly 1.7% of his assets are invested into Shark Tank deals, which actually feels pretty healthy, actually. Personally, I think everybody should consider putting money into equity crowdfunding, into startups, but it's super risky, and so you shouldn't put very much into it. And a lot of experts out there believe it should be roughly kind of 1 to 5%, and Daymond's definitely right in that range. And that's because that enables you to tap into what's called the Barbell Strategy. You can read about this strategy or this idea in books like Anti-Fragile, which is a great book. Basically, under the Barbell Strategy, you put most of your investments, most of your money, your capital, into really safe things that hopefully won't lose money, generate kind of an okay, decent return. And then you put a little bit, an amount you could totally lose and it wouldn't change your life, into extremely risky investments that have the potential to generate an insane return. With the idea being, if you put that little bit of money into these really, really extremely risky investments that have huge upside potential, and you lose all of it, then it's just a small amount of money and, you didn't lose anything, right? You're still kind of maintaining the status quo because most of your investments are in safe things. But if you do a good job of finding companies that have huge, huge potential, like Daymond did with Bombas, then you can generate a life-changing return. Now, Fubo is it's a great company and great brand. If you think about it, his net worth is about $350 million. Well, $160 million of that is based on his Shark Tank investments, $100 million of that based on one investment in Bombas. So yeah, the Fubo got him the opportunity to make that investment, which is great, but he's almost doubled his net worth based on just these few investments that only represent 1.7% of his net worth. Something to think about for sure. Again, not giving you investment advice, but just different ways to view the world as you think about, how to allocate your own dollars. Okay, as we bring this to the close, I do want to hit on a couple things that I think are interesting. So one, as I mentioned at the very beginning, he hasn't had any real exits where he's sold the company or taken it public and then, sold his shares and gotten a bunch of cash back. I couldn't find any, at least none that were meaningful. And so all of these returns that I've talked about, this 27.6x return, is all paper gains, right? He can't, it's not like he can just go into Robinhood and sell his shares in Freshly Picked and Schoolie and some of these other companies. He's got to wait until they get acquired or they go public or something happens where he can sell his stock. Now, that is the case, except for there is this concept called secondaries. Now, secondaries and primaries, what are they? Primaries are when you're investing directly in the company and the company is issuing you shares. And then that money goes into the company, is used by the company to grow the company. That is primary investments. Secondary investments are where you're buying shares from somebody else. And so that money doesn't go into the company, it goes to that other person. When you go and you're trading stocks on Robinhood or whatever your preferred trading app is, you are primarily in the secondaries market. You are buying and selling shares from other people. The money that you're investing in the company is not actually being invested in the company. It's not going to the company and being used to grow the business. It's really just going to some other investor and going into their pocket. In private equity and venture capital, secondaries are a lot less common because these companies are private. It's hard to get access to these investments if they're doing really well. And it's hard to sell them if they're not doing well because, how many other people are there out there that are going to be interested in buying that investment, especially if there's very, very little information about them. Now, that said, Bombas is large enough that there are people that are selling secondary positions in that company where early investors and owners and employees can go and work with a broker or go on certain sites and find buyers for their shares. And so I don't know if Daymond has liquidated any of his ownership in the company, but it wouldn't surprise me. And it probably would be a prudent thing to do to just lock in some of those returns, just in case, the company doesn't do as well going forward. He'll have made his return and put that money in his pocket. The flip side, though, is that he may not want to sell all of his position because he may believe that there's still, more room for the company to grow on the top line. And with that brings me to the last point, which is, although Daymond is by a multiple the best investor of all the sharks, he's like roughly 5x better than the other sharks in terms of his performance, he's also actually the worst investor. And what I mean by that is that he's lost a lot of money on his deals. Even though he doesn't write big checks, seems like looking at his portfolio that he tends to lean in when maybe he should lean out. And what I mean by that is even though he's only seen 45% of his companies go out of business, he's lost 66% of his invested capital, which is quite a bit higher than the other sharks. Somewhere between 1.5 and 2 times worse than the other sharks and on a percentage basis. But you have to ask the question, does it really matter? Does it really matter if you've lost 66% of your invested capital if you've turned the remaining 34% into 27x? Probably not. And, that brings me to this little anecdotal story for you at the end here. So there's this great investor, Ron Conway. He's considered the godfather of venture capital. And he's one of the very first people to popularize this idea of being a professional angel investor. And during the 90s, he put together a fund and started making early stage investments in companies. He invested in roughly 50 companies. And of those 50 companies, 49 of them basically went out of business. But the 50th company, which one it was? It was Google. And that investment alone ended up returning such a huge amount that it offset all of his losses and generated a huge return on his fund, allowing him to raise subsequent funds, make more investments into other companies like Facebook, and do incredibly well and help a lot of entrepreneurs. Anyways, let me know what you think of this video down below in the comments. Thanks for joining me. Be sure to check out my other video with Mark Cuban where we do the same thing and tear apart his track record as a Shark Tank investor. Thanks.